Island. And what I love about where I live now is like you say, like I live at my summer house. You know what I mean? Like we live by the beach, so by the summer, in the summertime or the 6 months of the year, it's the greatest thing in the world. In the wintertime, it's kind of quiet and kind of empty and freezing. But I'm also 15 minutes from JFK Airport. 15 minutes.
Mm.
So yeah, so it's just like it's a nice luxury when you're going somewhere, when you're getting home, like you land and you're home.
Yeah.
So it's just a great way to travel in and out. So it's just one of the things that I love about living here is that in and out is so easy.
Yeah.
Like I can get to Miami and get to my hotel in like 3 hours from the time I leave my door.
Mm-hmm.
Like with a very short period of time. So it's really, really good setup.
That's your go-to, Miami, your quick getaway?
A little bit. Yeah. My business partner is down there, and now my daughter is a freshman at the U.
Oh,
so
is she wearing the big gold chain whenever she gets like 100 on the test?
Yeah, exactly. They have a lot of school spirit down there. It seems like a pretty cool place. It's very different. I went to Cornell in the Northeast. My wife went to Fordham. So it's such a different experience for her to get on a plane and go somewhere warm. But she's very happy, and it's a very, very awesome institution. Like I like the place a lot.
Oh, I bet. Well, I went to Clemson, so we got to play Miami. First ever football game I went to was Clemson, Miami, and it was just an epic.
Yeah. I've been to Clemson. I've been to Death Valley. I have a friend that moved down to South Carolina, and my second daughter actually is talking about going there. I have two friends who've got kids there that absolutely love it. Absolutely love it.
Oh, you've been to Death Valley?
Definitely a potential for my second daughter. Wow. Yeah, I've been there.
That's an exciting place.
Experience.
Yeah, I don't think I didn't realize it until I got there. I was like, I was there for like a college visit. I had never really heard. I'm from the Northeast. You don't really hear about Clemson, right? And 5 minutes on campus, I was like, yeah, here I'm going here for sure.
Yeah. It's totally that kind of scene. I could have been totally taken over by. Second, let me just plug this in for some power. But did you like you love the experience? It must have a great alumni network and stuff like that. Like it's got to be a pretty special place, right?
I mean, I had an awesome college experience. I don't participate in the alumni stuff. I had a great time, but I kind of just separated myself from college after, and I started. My whole story is like involved with poker, and I just started going the poker route, and I just kind of said the education stuff I'm done with. So yeah,
very cool.
All right, so I hit record, guys. This is you've probably seen him before. Friendly face on Real Vision, and by the way, I wanted to first Tony Greer, guys. But I wanted to first thank you for finally putting out, and I don't know if it was recorded like previously, but thank you for putting out an interview that was actually in person, because I was so sick and tired of seeing Zoom call after Zoom call after Zoom call after Zoom call.
Man, I couldn't take it. Feeling it. Yeah, and we actually tried. Did you know that? Jason and I tried, and we were having so much technical difficulties. And I was like, would you consider going to New York City to film this in person? He was like, absolutely. And so I was like so excited by that. I was like, let's do it. As long as Brian can get there and Peter can get there to get us set up, let's do it. And it was really, really enjoyable. Really enjoyable. So thank you very much.
Yeah, well, because you guys are obviously both like people, right? Like I enjoy talking to people, and I enjoy body language, and I enjoy social dynamics. And clearly he's a guy who's built his life off of networking. And you're clearly somebody who kind of gets that, because as he spoke, I was kind of saying to people that was like an hour-long brag by this guy. But he was so nice that like you couldn't hate him for it. But it was just like, right. Oh yeah, I did this. It worked out to like the best extent ever. Oh, and then there was this thing that worked out to and you were just like sitting there like, whoa, like it was funny,
It was amazing. It was like talking to somebody that was like, well, I hit the first parlay on Sunday, and then I hit the second parlay, and then I hit the Sunday night parlay. So yeah, I guess it was a good weekend. I'm like, yeah. God bless you, man. God bless you. But yeah, you got to root for the guy.
Yeah. So one of the things I wrote down was like, speaking of that, because you've been in this game a long time. Do you think that that kind of in-person interaction has done really like amazing things for you in your career, and do you think that even matters these days? Because, you know, a lot of the people I know that are day traders, I wouldn't say that's their best attribute. So how do you feel about that, like in the past and now?
It has been a struggle for me to convert to the current form of information exchange, James. I'll be totally honest with you. You know, my life as a trader, everything was eye to eye, right? Like the best information exchanges, you are getting the best information from a salesman on the FX desk right here, talking to him, understanding what was going on. He was telling a story. You were on the exchange floor and you were face to face like this with somebody saying, "What do you think? What are you seeing?" And they would give you their lay of the land, right? And it was to the point that you always had a pack of gum in your pocket because you spoke so closely with so many people that if somebody came up to you that needed it, you were like, "Here you go, brother." So it's been a very, very dynamic change for me to start changing and taking information, you know, everything digitally, everything from a different app kind of filing into my notepad or system, if I can call it that. And so it's been very difficult. It's easier to log the information now that everything is in print and digital. And so I like it for that feature that now that I'm an analyst that creates product, that I go back and I can source things. And so that's one side of it. But you really, I never got a better feel for the markets than when I worked on the exchange floor and had between 5 and 8 meaningful, short, and inspiring conversations with other traders on the floor. And going into the day with that, while you were having your coffee or standing around or talking about it or doing your morning work, to me, that was the best, clearest headed way to go into a trading day. You know, you got feedback from other people that covered a lot of blind spots. You shared information, right? It was a relationship development exercise. You learned who the people to look out for that piece of information from. You learned what people might be providing information that was fadeable on a regular basis,
Right.
or at least sentiment that was fadeable. People would get excited at extremes that were very calm, you know, when the markets are range trading, and you would pick up that body language, as you said,
Right.
traders in the ring. You know, you'd get to, you know, there's nothing going on, and all of a sudden crude would move $1, and everybody in the ring is now focused because it's at a huge resistance level. And so you're literally looking around for the body language, for the most expressive body language, right? Because that's the guy that's got the biggest order that needs the most liquidity, and you want to know what he's doing.
Right.
So yeah, life has changed dramatically for me to not be able to look around. And, you know, I still, when you know, reflexively looking for prices, my head goes right up to looking for the big board. You know what I mean? Like it's never like looking to my phone or a computer screen. You ask me what the market is, and I'm like, oh, where's the board? I got to find these futures. They're right here. So yeah, the
Like,
world has
you
changed a great
put the
deal.
TV up there. Like you have to look up at the TV, right?
Exactly. So everything's quite different, and but you know, everything is a survival game and a evolution game in trading, as you know, and will continue to learn over your career.
Yeah, and that's kind of a thing I wanted to dive into was experience. Like, so you know, you hear about all these guys that used to be on the floor, and normally you hear about them in an Uber because they're driving it, and they're like, you know, this is what I used to do. So you're a good example of somebody who expresses like longevity, and you still seem to have that kind of drive, and kind of like, you know, you can feel it. You can feel the kind of the passion for it, even just in a simple interview with Ash when he's so serious all the time. And I'm like, well, this guy clearly wanted to stick around in the industry. And I wanted to see, because I've only been in this about 8 years, which, to be honest, 8 years is much longer than I expected to be in this thing. And I've heard that's, you know, I'm pretty happy with that. So yeah. You've been in this, what, 2 decades, like 3 decades? I don't even know. So what
30.
3. So like, what has experience done for you, and how is that helping you? Like, cause you've had to adapt through all sorts of different types of markets. And I feel like, and we'll get to it, but that's one of the reasons I hated seeing you, because I knew like this guy was going to be bullish, and I didn't have that view. But like looking back, I'm like, I feel like after this 2020 was over, I was like, Tony just got it. Like because he's been through these ringers before, and he kind of just was like at the point where he's like, the market's going to be the guy that tells you what to do. And I was still stuck in the place of, this is my first big kind of recession to deal with, and I think the market should be doing this. So what has experience told you throughout your 3 decades, and like, how is that really helping you like today?
Yeah, that's a really good question, and it's something that I try to sort of quantify and express in my writing, because I know that one of the value plays that there is with TG Macro and with the Morning Navigator is my 30 years of experience looking literally at the same 6 graphs, chart graphs, when I wake up every morning, James, right? So I learned from the very beginning that to sort of get anchored with your set of information in the markets, and sort of, I have these 6 screens of the dollar index, 10-year bonds, crude oil, gold, copper, and the S&P. And I look at those 6 screens. They're short-term trades, but I can glance at them and know what's going on in the world, right? Just a quick glance. This has gone here. This has gone here. I got it. Right. So that's one thing that I've been able to wrap that up and then have a story in my mind of what's going on. So I guess to get more to your point, if you've seen that graphic that shows a bunch of different points and it says knowledge, right? And then there is another graphic right next to it that connects all those dots, right? And that one is, or excuse me, the first one is intelligence, and it's all these points. And then the next board is knowledge, and it's all of those dots connected, right? So I don't know if I'm portraying the graphic properly, but that's what comes through in me a lot when I look at markets. It's like everything is a memory. Everything is a memory jolt. It's like, oh, this is going on just like when it happened when Russia was coming apart, right? And, we had all different signs back then, James. This is kind of an interesting story. We used to have different gauges that alerted us to stress in the markets, right? There used to be LIBOR OIS, right? Which was the interbank rate that banks charged each other, for overnight lending. And when that rate would start spiking, that, money was getting tight, liquidity was tightening up, and all kinds of, de-risking was about to happen. And now that the Federal Reserve is providing all of this liquidity, there's no stress among banks lending to each other, right? So that LIBOR OIS that used to literally be a red line warning flash, it's meaningless, utterly meaningless, right? So you had to now go through the markets and say, okay, where did that point of stress go, and how do I find it again? Right. So it's a very different, like, you lost that odometer went dark on you, and now you had to go find the development of what else it was. Okay, now we're looking at bond curve has been really useful to me, and understanding that, and going on the rates calls with 2 investment banks that I do some work with, and listening to how they look at the bond market as literally, it's kind of a morphing curve at all times to them, the way they look at it, right? It's not just looking at what 10-year rates are, it's looking at 2s bonds and how 5s, 30s, 5s bonds is trading, and understanding that differential. So picking up those, the new signals has been the key to survival. And so I think that,
just so I understand, so basically it's always this moving target of what the market is actually treating as like the indicator of stress, right? And your goal is to go find that little fucker, right? Like which one is actually important right now, right? Because other ones might have been important in the past, and it's cool to recognize that, but you have to be open to that not being the thing anymore and finding the new thing that matters.
Exactly. That's a great way. That's a great way of interpreting it, James. And what I find that also coincides very often with the dynamic macro change that you needed to be looking for is a change in the equity rotation, right? A totally different equity rotation. For example, when we were on the lockdown rotation, that was clear as bell to me, right? That was big tech up and gone, lockdown stocks up and gone. Leisure stocks, airlines, banks under pressure, cyclical stuff under pressure, right? That was just unwinding and unwinding every single day, right? And then we hit a point like a brick wall to me, and the brick wall becomes more obvious when you're staring at the same screens for 30 years. But we came out on what I called Miracle Monday. I believe the date was November 9th, Monday morning. And we had President-elect Biden on the tape for sure. And we had the first Moderna vaccine for sure. And on that day, you woke up and you were like, wow, this is interesting news flow. This is a big, big sentiment change from what we were just looking at. Now we're looking past the lockdowns for the first time. And if you notice then it was, energy straight up, then we actually, the cannabis markets caught fire out of the blue, right? And so when you identify that rotation and how it switched on a dime that day, big tech started going sideways. The rail stocks and the commodity stocks started exploding. The market started perceiving some inflation. And so, if you were kind of really all over that rotation and noticed how it changed on a dime, you saw that was the beginning of a big dollar cascade down, right? And so, it really is, for me, always been a study in how things are moving relative to each other and what the rate of change is. So, that was a big thing where, the Bloomberg Commodities Index was, set off a couple of alarms for me coming off the lows in March. There were I think there were 4 3 Sigma rallies in 6 or 7 sessions off the lows. And I was like, man, to me, that thing is like vibrating, sending out a pulse that it is going to another place. And so I guess it's just picking up which of those odometers, if we can, on the sort of dashboard are the ones that we really need to be focusing on and bringing those to the forefront of our trading. So right now I'm really focused on the curve and market-based inflation expectations and things like that in this new rotation.
Yeah, so it goes back to what you were saying about, like, you wake up, you get your information, and then you have that knowledge base going back. So it's like you could just draw on that, and then, like, it really builds into, like, what I'm kind of gathering from you is that, like, you don't have like a super set in stone macro thesis in a sense. The market is your thesis, right? And I get caught between that. Like, I get caught between being a day trader trading for ticks, trying to be super open-minded about, even though maybe I don't think the market is acting in a certain way, like, I find it hard to I find it hard to buy the S&Ps when I'm very bearish, right? But even though the short-term, like, bullish move in the market might be just screaming at me, like, just do it. Like, it's obvious it's giving it to you, but because I'm battling with the long-term ideas that I have, right? And it's like you've kind of said, like, I get it, like, it's cool to have that, but, like, here's what we're doing to make money.
Yeah, I've totally morphed. That was sort of my middle phase. My beginner phase was, all right, the world to me looks like this, therefore these prices will conform to these levels, right? Then I got a lot smarter and got into the mode that you're in now and was like, okay, I have my view, but this is what the market's telling me. And I've literally, I would say, and mostly, James, since I have gone out on my own, and left the sort of mental trapping of working at a big hierarchy with a lot of layers and layers of management, et cetera, since I was able to drill down on my own is when I was able to completely abandon my view. Like, my view comes from the brush strokes that the market gives me. And then I look at it and say, okay, this is my view. You know what I mean? Like, I don't make one up myself. I look at what's moving. I look at what's breaking levels. I look at what is, hitting, what I would call tension points where, something has been falling. Then it's been consolidating. And now it's picking its head up. Like we just saw with the 10-year rates, for example, where they broke out of the range and went to 120, as commodities are flying. So part of it is knowing what those inflection points are. And I guess to get back to it, my sort of biggest guide in the morning for my day is I have a screen with all of my macro components sorted by standard deviation move, right? So not by percentage move, but what their standard deviation is. And to me, that has become my Bible. Right. Like, wake up in the morning and it's like, oh, okay, what are the big standard deviation moves telling me? Right. The S&P is up 30 handles. Well, who cares? The dollar is off 60 basis points, and that's a 2 sigma free fall to a new low. That tells me commodities are going up and to the right today. You know what I mean? So starting off with those, and then at the same time, truing up that I do every day, truing up at the end of the day and looking at the same board and say, okay, how did we close? Did that security that was raging all morning manage to stay at the top of my leaderboard?
Right.
And because that says something. If it didn't, that tells me something else. But that is where I've been able to find the most clarity in truing up what the standard deviation moves are at the end of the day, because that's how we weigh them in the most meaningful basket, rather than looking at percentage wise and which necessarily, outpace the other one or whatever. Looking at them on a standard deviation basket has been the light for me.
And would you say, so it's funny because it's ironic. This morning I was saying how for the past year or two, there's been so much, if I didn't care so much about my daily schedule and sleep and having a balanced life and things like that, I would want to be an overnight trader right now. I feel like the last year or two has had, so this kind of idea that you're able to look up and kind of really get a good idea of what's going on. Well, you're seeing a lot of change because there was a period of time where overnights were dead and you'd probably wake up and not really get a signal. But lately it's probably been really helpful.
Oh yeah. On this side of call it the pandemic.
Yeah.
Like I've been saying, there are tire tracks all over the tape every day, right? There's money moving in specific directions with velocity, and there's nobody that can hide the tire marks that they leave, right? There's a buyer in this, there's a buyer in copper, and copper is up 3 sigma move, 7% rally to a new high, right? There's nobody that's going to sit there and accumulate copper without copper going berserk and sending the message, hello, we're buying cyclical metal here. Just so everybody, third day in a row, we're buying cyclical metal here. Is everybody getting the message? Right. And it's oh, I get that message. I get that message loud and clear, and position accordingly. And that was a signal, just to get to a basic nuts and bolts. Freeport McMoran and copper off of the lows, both the same week, had 3 sigma rallies in the same week, both instruments. And I was I mean, that means the bottom is in Freeport, and let's buy it at 12 as it goes through all the trend lines and see what happens. 32 bid, Freeport, 3 months later, 4 months later. And so those were good indications, and it's just getting used to seeing and maybe anticipating too.
Yeah.
Because at some point when copper's getting beat up and you're a natural resources trader and you see what's happening with the economy and you see what's happening with yields, and we're pricing in a bit of inflation, and you're they're going to have to buy metal. All the
and that draws on your experience again, right?
Exactly. And then I'm right in the middle of, on the J. Aaron Precious Metals desk, and understanding what players are buying and selling metal and why they're doing it, and everything like that. And, you're watching hedge fund buying just rip through producer selling. And then that the metal is on its way to another destination. And if you can somehow stay in the loops of some of those desks, which I try to do with a lot of my relationships and Bloomberg chats, hearing that flow is crucial. And so that is what has been, this kind of goes back to your first question, and is a good full circle, but staying in those loops has been critical, and staying in those networks, because now it's sitting in my office here between the bay and the ocean. I don't get a lot of color unless I go looking for it. There's no information going flying by my head. I have to go track it all down. So, if you can get in the loop and hear some bond guys saying, yeah, they're doing this in the credit markets, and here's some equity guys saying, yeah, we're seeing them do this in stocks. That confirms, a lot of your biases, confirms a lot of the tire tracks that you see, and then you can start connecting dots and finding the pressure points in stocks. Yeah, exactly. It's a constant for me. It's a constant kick the tires.
Right.
This is the position. This is where the market has guided me. This is what I've got on because of it. Now wake up every morning. Is it still sending me the same signal? Check, check. Let's go.
Right.
And then what's cool about that is you find these windows where you're like, hey, this might go on for like 2 weeks.
Mm.
This looks like this is just getting started, and it's probably got, a 2 or 3 week life upsize, right? And you find those little windows where you can have tremendous positions for a really short period of time. It'd be like, boom, never out of the money, never out of the money, because we noticed that dynamic had a runway to it and a little bit of time to develop. So it's a little bit of a feel there, but those are some of the tools that I use to really step on the gas when the time is right.
Sounds like a good T-shirt, Tony. Tony, never out of the money, Greer. That sounds pretty good. That's not bad.
Are those not the best ones, though? When you're
Sure.
getting in at the right time, and you just have the trailing stop on, and you're like, look at this.
Yeah.
All we're doing is catching that security that's going from the top bottom left to the top right, and bumping our stop along below it. And sometimes those trades go on for months.
Yeah, it's really interesting to me too, because I know you trade a bit more like tickers and stuff. I'm a futures trader, so like when I'm hearing you talk about this, I'm thinking of like the copper price action in futures. And being a day trader, it's kind of hard for me mentally to carry a position overnight because my like P&L's shifting all the time and drawdowns, but I have 8 other trades on that are impacting that. So it's really interesting because it's hard to break down individual products you're trading and kind of keeping with the flow, because I don't like looking at my P&L. It's like a big kind of mental thing for me. I'm a guy that looks at it maybe once a day, maybe.
Right.
So it's just interesting. But I wanted to ask this question before I forget it, because it was at the top of my head. Would you say that, just because it's kind of in relation to what we were talking about, that this past year and the intensity of it, back when it was like, full bore crazy, was there more energy and more fear and more whatever than previous times in your career, like 08 or like 2000 or whatever? Because this is the only one I've been through, and I was like, this was like peak level for me. And I'm wondering, for somebody that's been through other times, is it comparable? Is it more? Is it like whatever?
That was the Mac Daddy. That was it, man. That was like nothing. That was, I mean, I wrote about it. I should go back and I'll send you some of my notes back then. But I was like, you were witnessing the freaking, the biggest mammoth beast of a sell-off in the history of the freaking world. It is because we have never turned the global economy to the off position before, right? And it probably will never happen again, is what I thought back then. I kind of still think that that's the same, but seeing oil go negative in that episode was like a heart stopper, right? For a commodity guy, seeing the S&P, the speed and rate at which the S&P went down was unprecedented. And that's what was difficult for rookies like me. That was more difficult for experienced people like me, because both in the 2000 and the 08 crashes, there were huge short covering rallies, right? We had none of that during the lockdown, right? So there were a lot of guys going, is this the time when they caught everybody off guard, right? And, and is this the gap open lower that's going to turn into the rally? Mm-hmm. And it's like, back then it was like, no, this is the gap open lower that turns into down 250. Right. This is a problem, right? And then the next day is down 250. And that was like, holy shit, right? Like that was like nothing any of us ever seen before. But at the same time, because of that, it created the most visible and observable, barfing sentiment that you ever saw or heard before in your life, right? Like at the bottom, like my note called Turning Point that I wrote, I think it was dated March 23rd. And it was called it was called Turning Point. And I was like, look, I've got so much empirical evidence right now that it's like so freaking scary to buy a stock. That's it. I'm buying them, right? We're at the point where it's totally egregious to think about owning them. So this is the bottom. And that's what's cool about when the boat is moving fast, right? When the boat's moving fast, it's really easy to turn. And when the boat's moving slow, it's really difficult to get it, you know, in the way direction that you want it. With markets, when the boat's moving fast like that, it's like, man, the signals are just blaring on the screen,
Right.
and the sentiment signals. You know, you've got your brother-in-law calling up at you know, limit down and saying we should buy some S&P puts down here or something, you know, just to protect ourselves. And you're like, the market just fell 2,000 points. You want to buy puts now? You know what I mean? And so you just look at things like that.
I can't see this. That's the thing, is like, somebody like me who's an experienced trader, I got scared too. Like, right. Like, and then when looking back, oh yeah, again, going back to like your first briefings, I was just like, nah, this guy's wrong. What is he talking about? Like, you don't get it. I'm watching it every day. Like, I'm just waiting for the next limit down overnight or whatever. So, I mean, I have learned, I mean, I had a great year, and like futures trading becomes very easy at a VIX of 60.
Right.
Right.
100%.
So I'm not complaining at all, but the amount that I've learned post April is unfathomable. Like, it's so cool that you've had 20 years to be like, because you deserve to find a bottom like that with, you know, you never deserve anything in a market, but like the people that have put in the time and have adapted and have gone that long, they deserve to find a bottom because they get it. Like, I didn't know what liquidity meant, right? I was like, whatever. Like, I've only heard that the Fed's wrong about everything, so whatever. I didn't understand like what they were doing and how that, you know, I didn't understand that 33% in the stock market was that big of a deal even.
Right.
You know,
right.
I was like, why can't it go 80? I don't, you know, but you know, looking back, I'm like, oh, of course, like it all kind of like, it kind of adds up.
Well, let's go to a really good example of why I knew that, or why I wound up getting it right, that the bottom was in. Because in the great financial crisis back in 2008, my sort of, as a sales trader, my side job was buying short-term SPY puts on Friday, you know, on Mondays or Tuesdays when the market was bouncing, and buying short-term SPY puts that expire on Friday when I had the idea that it was going to be one of those outside weeks down in the bear market. And I made a living and a killing off of trading like that, right? So at the bottom of that crisis, I wound up actually managing to be somewhat flat. It was very scary. But then as the market started to bounce, I was looking for my spot to employ the same strategy, right? Like, oh, the bounce is coming, but it's going to go back, right? And we're going to have that next flash. And it took me, I think, 2 tries of, you know, getting bankrupted really quick coming out of that hole on those 2 trades really, really fast. And I called somebody up and I was like, this feels different, man. Like, you know, something changed. Like, I just got wiped using the same kind of strategy and this and that. And it was sort of like, he was like, dude, like, do you see what this liquidity is doing? He's like, this isn't going to stop. He's like, I don't think these guys just turned this on to get this off the lows. Like, this thing is, and, you know, I probably tried 1 or 2 more times on a bounce to say, nah, that was really it, you know, and lost one more time. And that was the never again, right? That was the never take these guys on when they are trying to engineer the rally out of the hole. I mean, you know, you might want to wait a couple months and take a swing, but don't do it out of the hole. And that's when, to me, it became obvious this year, March, April. It was like, oh, we're coming out of the hole. These guys are not going away. New highs. And people thought I had, you know, 6 heads coming out.
That is just so huge. That's like that right there. Right.
I paid for that lesson. I paid
exactly.
For that
you paid your tuition. Yeah. We always talk about like the losers are tuition often, you know?
Yeah. But you got it back. I got it back.
Right. Yeah.
You know
what you got the reimbursement.
Right. I got the reimbursement, and all is well in the universe now. But, you know, you pay for that lesson. You stub your toe a couple times, survive it, be alive for the next time that vol goes to 80. Right. It's like staying alive at the blackjack table for when, you know, the dealer starts breaking six hands in a row, you know, and that's usually when, you know, things get hot and you make or lose all your money. Right. You know, and so it's kind of staying alive for those times and keeping your powder dry. And that's how I feel right now. Like I'm more into dry powder now with this, you know, with the GameStop speculation and the Wall Street bets guys pouring in, and hearing
Right.
about gaggles of high school kids trading American Airlines and GameStop, and you just get like,
Right.
like,
Yeah.
I don't want to be in that pond.
Yeah, that's a great point. By the way, stick to poker if you're going to play any games. Like blackjack, talking about your 6-card run. Come on, we all know that's
No,
wibble wobble. You probably got a favorite number you play in craps too, right? It's like 32.
Yeah,
It's like my favorite New York Rangers player or something, whatever.
You know it, dude. You know it. I always like the instantaneous nature of blackjack, right? It
Right.
was like deal them, pay me, or deal them again. You know what I mean? So I never caught on to the I'm not smart enough to play poker with a lot of smart guys, that's for sure.
Yeah. Well, to be fair, you spend your whole life trying to like outplay smart people. Sometimes you just want to go to Vegas and rip it in on a table game and just say, whatever, I'm going to the steakhouse after this and we're going to have a good
Absolutely, man.
I feel that.
Yeah.
All right. We're getting to like 40 minutes here, so I'll just move to some. I think all of this was like really, really good, and I think I'll just throw some like little quick, fun questions at you.
Sure.
And one thing I wanted to know, because I'm from New York, but what's a perfect day in New York with Tony Greer? Like, take me through the day. You wake up, you're gonna go get like whatever. You're gonna get a bagel somewhere, breakfast, like, and then what are you doing throughout the day?
So
Close it off with like whatever. So give me the perfect day.
Oh, you mean so like a non-business day?
Non-business day, like somebody's coming in and you want to like, hey, I'm gonna take you to have a great day in New York.
You know what? I love that question because I'm a planner and I'm like a party planner. So I do have friends and college buddies that come down over the summer, right? So let's call it a summer day where you get to wake up. I have a bagel shop that's right behind my house. So you get the bagels fresh out of the oven, go down to the beach for a couple of hours early in the morning, right? And then you come back during the day to where I live, which is close to the beach, because I'd rather hang out kind of on my premises and just relax here. But then what I like to do is get a sort of tailgate started here before we go to the Jones Beach Theater for an outdoor concert at night. Right. Like that's like the go-to attraction when I have people come here, or when there's a concert playing of a band that my friends and I like. There's always people coming here, staying at my house. We have a big tailgate here. We go to Jones Beach, have another tailgate there, see the show, come back, party at a bar in Long Beach after that. And to me, that's a good, wholesome, good time. You know what I mean? And it's always steeped around live music whenever possible. I miss that so much right now. My head hurts, right? Like there's a definite absence in my spirit because I haven't been standing in front of a great band since March 2nd, Widespread Panic at the Beacon Theater. So that's the stuff that I'm into, man. That's the stuff that makes me happy, being outside and checking out tunes, I guess. Yeah.
Yeah, I remember, I think you mentioned one of your videos about live music, and I was like, oh, yeah, that's that guy. He's for sure like a live music guy. Like,
yeah.
And you just proved it by like, you always remember the date of a show you saw. For whatever reason, you have to tell people what the date was. Yeah, it was January 18th, 69. It's unbelievable, you know?
Oh my God, that's incredible. When I listen to some of the, like when I listen to Fish or Grateful Dead on any kind of a radio stream, I always challenge myself to nail what year the song is from. You know what I mean? Like, so I'm one of those guys. Yeah.
That's funny. All right, give me your teams, sports and teams.
Sports teams, I've always been a Yankee guy, first and foremost, man. I mean, I was sitting on the couch with my mom when Bucky Dent hit that home run, and that was like the beginning of like Yankee history for me. I was a season ticket holder in the late 90s in the old Yankee Stadium for every single one of those Derek Jeter memorable moments. The Mr. November 2 nights in a row in the World Series against Arizona, I was there, right? Like so that's where my heart is. You know what I mean?
Yeah.
My heart is always in the old Yankee Stadium.
Okay, real quick. So, Yankees, old Yankee Stadium, then, not new.
Yeah. No. And a little known fact, I was sitting first row behind home plate for the opening day in the new stadium. CC Sabathia on the mound, sitting next to the manager of my firm, Ernie Dahlman, who ran Dahlman Rose, and we were just the two biggest Yankee fans in the world. And he was like, me and you are going to opening day in the new stadium. and we're sitting behind the catcher, and I was like, I'm in, man. So he treated us to that, and that was cool. Yeah, that was a really cool part of history. So that's my baseball team.
Yeah. And then you got you a Knicks fan? Or don't care?
Yeah, no, I no longer care with what's gone on with the I was there for Patrick Ewing, and I was there for Mark Jackson and that unbelievable team, and so the spirit has gone from there, and I kind of left basketball with it. And so I'm not even really much of an NFL fan, to be honest with you. I'm kind of NFL agnostic. I watch a lot of college lacrosse. Like, I probably know more about college lacrosse than I do about any sport.
I'm from Syracuse, and we had we had an amazing pool of lacrosse players up there. Unbelievable.
The absolute greatest of all time. Casey Powell is one of the legends. Yeah. He's a really good friend of mine, and it's one of my favorite programs in all of sports, actually, because it's so historic, and they've really left a mark on the game, I would say, as much as any other college, if not more.
Yeah, I mean, it was always the same teams: Virginia, Johns Hopkins, Syracuse, like
Maryland.
Yeah, so interesting sport. I like it because I gave it a run for 2 years. Ended up saying, I am not a lacrosse player, but I really respect the sport. It's a tough game. It should get a little bit more attraction, but there's just not those personalities that have made the sport great yet. So hopefully.
No, if you watch the PLL is a fantastic product. Even for somebody that's a huge, long-time fan of the game, the league is as good a level of lacrosse as the world has ever seen. And it's starting to get that chippy personality that hockey's got. And I think it's going to win. I think it's going to win over a lot of fans because they've got a really cool model. Rather than having one team in a town, they have 6 teams, and the league travels from big city to big city, and they do the rotation of games there. So you might get one team versus another on this weekend in Denver, and then you get 2 other teams playing against each other in New York.
Right.
And so it's an interesting format, and it's attracted the best talent in the game. And man, it's fun to watch. Really fun to watch.
Yeah, I've gone down some weird YouTube rabbit holes, and some of the lacrosse vlogs were one that I found myself in one day, and I was like, you know what? I got to stop. I don't know what I'm doing anymore. I'm 33. I'm watching a lacrosse vlog of like one of the Gate brothers or whatever.
Yeah. No, well, for me, I'm living through my son because he's a player now too. So that's what keeps me so close to the game.
That's cool. We just had our first kid. He's almost 8 months old right now. So we're really in the thick of it. And I'm just hoping to skip to like the 8-year-old baseball player version of him,
Oh, that's so great, Jaymes. That's such a great admission, because I always told my wife when the kids were toddlers, I was like, I'm going to be much better when I can throw a ball to these kids. You know what I mean?
Yeah.
Like, I know I'm not much help right now, but I will be when they get bigger. So
I know, I'm totally with you. I'm like, I got to trade. Sorry, it's just crazy over here. And my wife's like, the 6 is 10. No, it's not. And I'm like, no, it's crazy.
I can't change diapers now. I got 3 positions. Are you nuts? Like,
yeah,
I mean,
that's funny.
That's what it would be like.
All right. Well, hey, I know the markets are pretty interesting today. Do you leave us with any words of wisdom, any thoughts on things moving forward, whatever?
Man, I still think that we are, the Biden administration is an interesting change to monitor, right? It's going to be very different from the Trump administration, but I think that the ball or the sort of control of the markets remains at the Fed. And I feel like now that we've seen, 34 or more very, very aggressive executive orders, I feel like we're going to get the direction of how this is going to go for the Fed. And it seems like they are going to have to be, they're in this position where they're prepared to fight racial justice and climate change via monetary policy. And to me, if there's one thing that jarred me the most last year, it was listening to Grant Williams talk to Felix Zulauf. And Felix Zulauf said that he could see the Fed balance sheet getting to something like, and everybody in the world is going, to what? And he goes, 40 or 50 trillion. right? And that, you know, and so that just kind of opened this Overton window in my head and started to say, oh my God, like we're at 7T now, up from 4T, which was just a shocking, that was the biggest
Right.
story in finance last
Like
year.
you hadn't even considered, right?
Exactly.
Yeah.
Like nobody was like, you know, so we go from 4 to, you know, 4.5. Like, no,
Right.
4 to 7.2 and now to 14.
Right.
If we go to 14 now, that wouldn't shock anybody because we just did double.
Right.
You know, so, you know, you just starting thinking in your mind that, to me, that just opened my brain up. Oh, okay, well, Jesus, where's the dollar index at a $40 trillion balance sheet? It's a lot lower. Where is the stock market with a 40? Jesus Christ, it's a lot higher. You know what I mean? Where are food prices? Like, oh dear, that's why the grains just picked up and turned after a 10-year bull market. You know, so those are the things that I'm thinking about now. And sort of, let me end that call.
It's possible that I just lost him there. Well, guys, I guess it's just me for now. I'll tell Tony that no big deal. I think that was a great call, and hope you guys enjoyed this. He was a good dude to talk to, and yeah, I'm going to post this on the exchange and hope it was worth your time.